Welcome to our webinar. This is part of the CEO Talk series hosted by Professional Master in Banking and Finance, PMBF, at the Asian Institute of Technology, AIT, Thailand. Let's start with a few house rules. All attendee audio and video are muted. If you encounter any technical problem, please send message to chat box and our dedicated team will answer. If you have questions for the speaker, please wait until the Q&A session after the talk, and please type your question in the Q&A box, and some will be invited to speak directly to the speaker. So now I would like to invite Dr. Venkatesh, Program Director of PMBF, to introduce about Professional Master in Banking and Finance.
Thank you very much, Dr. Phum. So we are delighted to host this fourth in the CEO Talk series. The Professional Masters in Banking and Finance is a very unique one-year program targeted at practicing bankers in the region. The 7th batch is due to graduate this year, and we are looking forward to hosting the 8th batch in 2021. I'm now handing it over to Dr. Phum to play a short video that tells you about this program.
Just 1 minute.
Dr. Phum, it is yours now.
Yes, yes. Give me 1 second, please.
It's a huge opportunity for me to improve myself, as I had been working in banking sector for so many years, and now I get opportunity to refresh my knowledge about the international banking practices.
I have 5 years of banking experience in Bangladesh Bank, the Central Bank of Bangladesh, but I need some more knowledge on the commercial banking. The program of PMBF is customized for what we need to do in our personal career or in our professional activities in Bangladesh.
Oh wow, it was like just wow. I'm just one of the special ones to be the AITian, and it really feels amazing.
Yes, I feel really privileged that I was selected for this program.
I have a dream to study here. I am so honored to get admitted here. I'm learning so many new things that I know I will grow as a person as a whole.
Because AIT is an institution of top-notch faculty, mesmerizing environment, diversified culture, and new trick facilities.
I want to know and the knowledge of international degree. That's why I have come to AIT.
Back in 2017, when I was in AIT, I was quite impressed by the faculty and the administration, as well as AIT's campus.
We had to go through a competitive examination and a selection process, and at last we actually, luckily I got selected.
And I have to compete with many other central bankers, and Alhamdulillah, finally I am selected.
The instructor and professor are very good and expert at that. I don't have any financial or accounting background or basic, but I feel that I can learn it very easily.
It's a very beautiful campus. I love the environment of AIT. all the staff and the professors are very cordial to us. The food and the facilities for the students is very much comfortable for us.
I found that AIT is a very nice institution, not only in Asia but also the world. It is a good ranked institution for post-graduation degrees.
In this course, I have come to know a lot of things that we have studied earlier, but not in the professional sectors or how it is affecting the professional sector. So this course is very important and very offering me a learning curve that wouldn't be possible elsewhere.
It will help me a lot to contribute my country for my working place to do something better.
PMBF program has been one of the milestones in my life, in my career, for learning international banking and finance. I get to learn here in a very good learning environment with all the resources, with my international colleagues from different countries and faculty who have a very good knowledge on the banking. I'm very confident that what I learn here, I can use them in Nepalese banking industry.
Thank you very much, Dr. Firm. May I now invite Dr. Naveed Anwar, Vice President Knowledge Transfer at the Asian Institute of Technology, to say a few words and welcome the speaker.
Yes, thank you so much, Dr. Venkatesh. And once again, Ms. Sanjib Subba, thank you so much for giving the time to us. And I know that you're extremely busy and you're managing so many enterprises, but we are very grateful that you could find the time to share your knowledge with us. Actually, at this time, AIT just recently has been increasing its focus on developing a closer collaboration with the enterprises, and banking and finance organizations are the key that we want to expand our collaboration with. And obviously offering the professional master program is one way that we can interact, but we also thinking of having greater in-depth collaboration with organizations and enterprises. Especially, we are very soon going to launch our AIT Enterprises Alliance, which will be a platform to share knowledge as well as expertise between the enterprises, as well as with AIT and its partners. So we really hope that through speakers like yourself and experts like yourself and other experts on the panel, not only AIT can help to disseminate knowledge, valuable and practical knowledge to other participants, but also create collaborations that can expand the horizon, both for the professional development as well as for the education for the future generations as well. So we are really grateful that you could find the time, and I hope that this will lead to other activities in the future. So we look forward to collaborating with you and with other colleagues attending the event. So thank you once again, and we hope that we will be able to meet in person very soon when the situation improves. Thank you.
Thank you very much, Dr. Anwar, and thank you for gracing the occasion. It's my pleasure to introduce Mr. Sanjib Subba. An article in the New Business Age from Nepal recently described him as a man for all seasons. So Mr. Subba is a very experienced banker, having started his career at the Grindlace Bank, and is quite well known for his signal contribution in building up the Nepal Bankers Institute into a powerhouse of learning and development for the industry. Recently, he has taken over as the CEO of NePS, and in this capacity, we thought it would be exciting to hear him talk about the changes, the disruptions that are happening in the payments industry in Nepal and in the region. The payment industry has been particularly vulnerable to new technologies, and increasingly the payments business as a source of revenue has been shrinking for banks as alternative modes have come into play. And these alternative modes pose a challenge for the banks to find adequate responses. This also poses challenges for regulators who have to ensure that the incidence of fraud is kept to the minimum, even as customer convenience is enhanced through these innovations. Mr. Subba is uniquely positioned to respond to the issue of how banks and regulators, including the central bank, respond to these disruptions. He works closely in contact with the Central Bank of Nepal and is also privy to the discussions of very senior bankers, having served on the boards of some banks in Nepal. So I now hand over the floor to Mr. Subba for his presentation and the Q&A to follow. Thank you very much, Mr. Subba, again. Please welcome.
Thank you so much, Dr. Venkatesh, for the kind introduction. So let me, get started, sharing my thoughts. Basically, in next half an hour or so, I'd like to speak, giving you the actually kind of the landscape introduction on Nepal electronic payment system and also the kind of payment landscape in Nepal. Then we'll get into the disruption discussion and the roles of the regulator and how the payment landscape is changing regionally and as well as globally. So namaste everyone and warm greetings from Nepal. So basically the Nepal Electronic Payment System Limited, the company that I'm associated with right now is it's a PCI DSS certified company. I mean, we are backed by banking technology switch, mainly it's a backend switch business, providing front-ending solution to about 16 odd banks in the country. So that takes us to the number game of we are licensed PSO from the central bank. So we are servicing about 1900 ATM in the country and about 15,000 POS terminals. And that translates into the volume of about 237 billion Nepali rupees and about 2.8 million customer base that comes from our member bank. So roughly we do about 3.3 million annual transaction. Actually it's 33 million annual transaction. That's roughly about 100,000 transactions a day nationwide through different platforms. Then we also process at the back end, the Visa, MasterCard and Union Pay in a different product portfolio. So for Visa, we have a separate agreement and the MasterCard and the Union Pay. So all these brands are processed through our system in Nepal. So NePS is mainly right now, we are doing the card management hosting service for debit card, credit, and prepaid, as I mentioned about, all those brands. And we are also acquiring of Visa, MasterCard, Union Pay through ATM and POS channels. And the green pin is something that we introduced in Nepal about 2019, last year. So the whole idea about the green pin was, make it environmental friendly, so that paper process, the paper generating pin generating through the paper process is also addressed. So that was our attempt. And some of the banks are enjoying this service in Nepal. So basically at the back end, we do ATM management and monitoring, POS and merchant management, transaction processing with EMB standards, 3D secure service that's mainly for the e-commerce transactions, and EMI and loyalty program, and also real-time fraud and kind of stops. So we are working on several projects in pipeline at the moment. There's relates from contactless and virtual cards to contactless POS acquiring, cardless withdrawal and funds transfer, contactless cash withdrawal from ATM through QR. This is particularly during the this pandemic time. People don't feel comfortable touching the ATM machines. So we are trying to work with our solution provider. How could we help, come up with a solution so a lot of exciting things are in pipeline as we move forward. This is all initiative of the NePS, mainly to help support the payment landscape and the system in Nepal. When we go more and more deep, as you also raised, more and more deep into the payment space and the, digital payment space and fintech, the challenge is, of course, of the cybersecurity. And no one is immune from the security perspective. So at my company, we've also taken this as a prime concern over the business, and trying to, onboard the international standard security operations center, at the initiative of the NePS to start in Nepal. So this is where we're trying to focus more on the compliance, more on the security aspects. I'll talk more as we move forward. So to understand the Nepali payment landscape, I mean, a lot of things has been done. I mean, thanks to the, forward thinking and forward-looking thinking of the regulator, and also as well as of the industry player. We have, like the wallet services like eSewa and Khalti, and several other wallets are, operating like Prabhu Pay or IME Pay. And then there's we also have a consortium of, company known as NCHL that take care of check truncation system. And, they also have many other digital payment solutions. So the landscape is, like a lot of new players are coming in, and with that, the competition and the solutions are also expanding into the market. Looking at the data as of now, like this, if you look at the Nepal as a country, actually, from the payment perspective, Nepal is not a small country from my perspective, with, almost 30 million people. So that's about 3 crore, it's a kind of very vibrant kind of population when comes for the payment kind of landscape. And the demographic wise also, there's a good amount of young population. That 74% population is below 40 and 60% population is below 30. So that gives us a, very young country with a young, savvy, smart population. Mobile phone penetration is also pretty decent, actually, very good. 135% mobile phone penetration. There may be duplication of SIM, but even then it is considered very good. Internet penetration is almost 60%. So the cost of data has drastically come down in, like the last 5-6 years. So that ecosystem is, kind of building up for the, hold the digital intervention and the disruption, payment disruption. The ecosystem is slowly, it is building up. If we look at the data, I'm just trying to run the, payment landscape data of last, since this pandemic started, the lockdown started. And it's exciting to see that, the numbers are growing up. People are getting used to the, using digital channels. That's a very good signal. I think that's kind of the sentiment where we all, like actors and players into the system, will have to play on and capitalize from this increasing sentiment of general consumer who are moving to or switching over to the digital platform. So there's an increasing trend into that if you look at this number. Similarly, like transaction volume is also into the upward mode, many different stuff. So we also have, with the intervention of central bank, RTGS, real-time gross settlement technology has already been operated in Nepal. In terms of the mobile banking, we have about 11 million total subscriber in mobile banking, about 5,000 average QR payment per day. So these numbers also, for a country like Nepal, where the technology penetration is still struggling to get more deep dive into the base of the pyramid, and where the digital divide is also being discussed at wider length. But these numbers really gives me very positive vibes and thoughts that I think we are into the right direction of the whole vision, where the digital economy and the digital payment system as far as they are concerned. Now, from my perspective, every country, what they need, not only Nepal, I mean, to have a, like a robust payment system. We're talking about the, from the disruption perspective, disruption from the regulator and disruption from the banking industry. The payment system actually evolves around, with a country-specific vision, mission, is the strategy, objective, and it's like, the kind of the goals that we'd like to set. And the first, the condition, precondition of that payment ecosystem is a national strategy. At least we should have a formal kind of a strategy in place where, as part of the, actually, I'd like to link that with the financial inclusion. Where the whole idea of this notion is to bring as many people, irrespective of their economical, political, social, and the physical, the background, geographic background, into the payment ecosystem. To do that, I think we'll also have to build that's where the disruption is required in terms of the legal and regulatory framework, where many countries are creating disrupting the entire system and coming up with legal and regulatory framework to address that, because we need some basis. For example, like the electronic, the legality of the electronic payment and the cybersecurity issues, and also the authentication issues, the validation issues, and then the signatures, the digital signature, all of this has to be backed through the legal and regulatory framework. Then that also brings to the discussion where, I mean, I'd often, I think we also discussed before the start of this event, where, what's the role of bank and fintech, and how, like it is going to creating kind of the collaborative approach, or like, both of these entities would go, like on a standalone, separate way. From my perspective, I think there has to be meeting ground. There has to be collaboration. Banks replacing fintech or fintechs replacing bank. I don't think that is a discussion. I think the discussion is more on the how could we profit from each other's coexistence and capitalize on our coexistence and create a synergy where, like the, because anything that has, when it comes of the payment or the, like the, in terms of the whole financial landscape, the role of both fintech as a startup company, or as a, like coming up with the technology that helps and complements what banks doing. So I think that is the kind of the meeting point. And I see a lot of opportunity where bank and the fintech can collaborate, and and the end goal here is to reach out to the ultimate beneficiary at the base of the pyramid and include everyone into the the payment landscape. So that is where a lot of banks are doing, disrupting this by like either coming up with their own fintech solution or fintech company, or establishing. For example, I'll be talking later on in one of my slides, actually is one of the Thai bank, Siam Commercial Bank, I think, which like they have created their own fintech arm. Yes, and my next discussion point again is the collaboration, where this entire industry, the payment landscape, is all about collaboration. Like you need to collaborate with the operator, with the provider, with the like the agents, and even with the like security, because as the more we move into the digital payment landscape or the digital financial landscape, the the threat of security always comes as a like a major challenge. So the cybersecurity is something that we need to have a strategy. Every country, every regulator, like a cybersecurity framework, and this is where more and more collaboration in terms of like coming up with a solution, coming up with the sharing of the experiences, sharing of the cases and the events, and even like running, like for example, hackathon. Like the where the amateur or the aspiring hackers would be invited to, try to penetrate your system. So those kind of innovation and disruption is required from my perspective. So I was talking about, this Bank of Thailand that, considering licensing for digital only banks. So this is from my perspective, one more disruption. This also reminds me what RBI did in 2016 when they come up with a, like a new licensing policy for a new breed of bank called fully digital bank in India. So they are known as, I think, small finance banks. So they are supposed to be fully digital and, provide product and services through the digital platform. So this kind of regulatory disruption would help, take the financial inclusion agenda and also help the entire the payment landscape to the base of the, like the pyramid and to across the location in geography. So this is a very, good initiative. Bank of Thailand is also thinking from the similar angle. And also the regulatory disruption in terms of the cryptos, where actually Bank of Thailand has already started to build a trial, central bank digital currency, this is again interesting, very interesting to see this. This is where one of the conglomerate or big industry in Thailand is being, like they are piloting this technology. And actually the company is using the technology developed by Digital Venture, which is the fintech arm of a commercial bank. As I mentioned earlier, that, kind of the disruption that banks are doing by not shying away from, or like, running away from fintech, but, equally coming up into the front and, trying to come up with their own solution or even getting into the fintech themselves. I think that's, like a very good notion as I see going forward. I also had a, like a brief scan over the Boston Consulting Group study they carried out in the region. Pretty good things happening in like Indonesia or like in Vietnam. Like if you look at these numbers, the e-wallet penetration among the regions unbanked, particularly, in terms of the taking the banking services and products, particularly from the retail segment or consumer financing like perspective. I think the technology is a major, enabler and catalyst where we can ride on some of these vehicles and try to reach to the maximum number of people who otherwise were not part of the system. So the BCG study also confirmed this, like more than 1/3 of Southeast Asian consumers surveyed are like, their activity, banking activity, including credit cards and loans to non-bank digital players. So similarly, like, in the rest of the world, I often quote, give example of how the payment landscape were disrupted 2 decades back in a country like Kenya. That's already more than 23 years in a country like Kenya with a kind of a emerging economy, like, they managed to, like the entire digitize the payment landscape and successfully running it for over 2 decades. So this space is going to grow. The use of mobile-led solution in terms of entire financial and the payment, particularly for the people at the base of the pyramid, would really come as a, like a very good, support in trying to bring them into the access to finance or moreover access to, payment solution and access to banking services. So just like, in terms of like, just looking at the data from China and India that the BCG and the World Bank publish, if you look at the country where the Southeast Asia is at the tipping point, but the China in India is like, they have gone into the maturity 2 billion market and, like the huge market, but they're the kind of the, the size of the e-wallet penetration is at the maturity but I see a lot of promising stuff for the Southeast Asia where it is tipping point. But then it's a time that next level of disruption has to be thought over, because what's next? I think that as the more and more people would start using like mobile solution and directly connected to their bank account, going forward the relevance of the wallet would start have a question mark. Also wanted to just like in terms of the digital value of digital payment to GDP in India is a pretty promising sign. As we look at the data from compare that to 2014-15 to 2018-19, it is on the increasing size. Similarly, most of the countries, if you look at it from Argentina to UK, Turkey, so digital wallet, digital payment to GDP from 2014 to 2018 are largely either maintaining their status quo in some countries, or largely in most of the countries it is in the upward direction. So again, because I'm taking example of India because we are highly influenced and highly inspired by what they have done in terms of the payment system, considering the kind of the population and the economic size they are in and the kind of the geography they have to maintain. So the digital payment volume, running to 1,638, crore into 2018-19. So basically, after talking, giving you the kind of the snapshot of Nepali payment landscape and regional kind of stuff. So what are the levers to drive the cashless agenda? I'm picking this source from the Boston Consulting Group, giving them the incentive, because, unless we do not incentivize the electronic payment through pricing and incentive, we have to get people used to getting accustomed to these technology and products, and a lot of inspiration and a lot of motivation and incentivization has to start, because because people need to get used to using these product and services. We have to encourage competition by enabling post payment solutions and creating market transparency and supporting innovation. And this is the role of all the actors, including the banking industry and the fintech and the regulator, because that's the kind of the disruption that we have to bring in by incentivizing, by encouraging, and by providing infrastructure to interpayment, redesign operating models, and move involve the private sector. The more that we expand the footprint of digital payment, I think from my perspective, what it does, it creates a, enabling environment at the, think about, having this digital payment enabled at the base of the pyramid, where the lots of small number of mom and pop stores kind of stuff to, regular farmers, people, who earn their livelihood through subsistence farming or the livestock. So if we can capture all of these, them into the digital payment network through some kind of a scalable solution and the scalable technology, the opportunity are really huge. So we have to, and then market confidence, because people still, want to feel and touch the currency note, and, they want to see the cash at hand. So that's the kind of the psychology we have to break. And right now is the great time from my perspective, where the pandemic situation, people do not fear of touching the cash because of the contamination. And I think this is the time that we have to, capitalize. So a lot of new innovation and the new way of doing things. So it's also time to disrupt our own thinking process here, challenge the status quo, and come up with a solution that really helps people at the wider section of the society. Again, in terms of the restraint of electronic payment, so I mean, technology is expensive. I mean, it's not cheap. So any technology solution today, because of the various regions and because of the scalability model, the cost of the technology is always high. So it is there is limited availability of cost-effective way to use and kind of the solutions. So there has to be ongoing investment in terms of R&D and in terms of the innovation that all the actors and players must find a way and must also fund the entire processes. For example, in a country like Nepal, where I'm from, I mean the start of investment from a formal sector is into the technology-led ventures are not that need to improve a lot. So because people, even at the financial analyst side, I mean to understand the investment into the technology and the payback period, or from the ROI perspective, from the risk management perspective, we need to build that kind of talent inside the financial system to have that kind of the ability. Then sometimes, and the next reference from my perspective, lack of customer-centric solution. We build a solution, but do we put the core beneficiary or the user in our mind before we come up with the solution? Because the solution from my perspective is something that is user-friendly, something that is easy to use, and something that adds value, and something that actually is needed by the these people. So who are the user group? So that's also one of the restraints, and lack of coordination between different government entities, state-owned enterprises who are let's say telcos here, or the utility service provider, or transport operators, and government agencies who regulate them. So, and of course, the role of different government entities and the entire the banking and the finance system. So this is where the collaboration, as a whole, to come up on the same table and trying to come up with a solution, because at the end of the day, almost all users are using multiple products, and they are also in the similar user group. Still, reporting and being mandated by different stakeholders. So that creates, leads to the duplication of effort issues and a lot of inefficiency kind of stuff. So this is where I see a lot of opportunity when coordination between different government agencies can come up to help the, the entire payment stuff system. And of course, the insufficient trust is where increasing sophistication of financial crime and fraud, this is one industry, cybersecurity, I don't think anybody can comfortably say they are immune, right? So anyone and everyone right now in this world is vulnerable to attack. But again, having said that, so this is where the challenge is to increasingly, create awareness. And when it comes to the security, everyone must, exercise the constraint and they exercise the restraint to come up, be vigilant. And also work in a collaborative model from law enforcement agencies to financial industries to any company or institution that hosts data, that is sensitive or has its significance from the security perspective. So the trust has to be built, and the trust can be built only by way of giving a confidence to the user and the stakeholder through implementation of, security, cybersecurity related policy and the implementation and also the systems and the technology. I think that should be the way forward. I mean, the potential economic benefit of move to cashless, I mean, we're talking, of course, the cashless kind of economy in Nepal. So there's a potential economic benefit compared to your GDP, where, as high as 3.1, if you look at United Arab Emirates, but the only reason I'm putting this slide is there's a potential economic benefits of move to cashless. But at the same time, we see challenges in emerging economies or small economies like ours, where the ecosystem is slowly building up. Let me give you an example of e-commerce. I think in our last discussion, the gentleman from Pakistan, he explained like case study from Pakistan, where e-commerce is taking like shape, but then it's mostly on the COD model, cash on delivery. But that defeats the whole purpose of going into the cashless economy. Of course, for that matter, ATM also, defeats the whole purpose of, getting into the cashless. But these are the evolving process. I think we should get started at least, at some point. And this is where the, the entire payment system we talk about. I mean, from my perspective, we have to disrupt. Disruption in a sense, in a positive way, where the disruptive leadership is the ability where we would, challenge the status quo and look for ways and innovation. How could we, do things differently and add value? And also, does this solution that we are providing is secure, is efficient, does addresses the need of the people at the base of the pyramid? So if we look at the the more and more to make the payment system robust, I think this is where disruption of both from the bank side, from the regulator side, the fintech side, the investor side, from different angle. So we'll all have to come together. So I think that's what I wanted to, at least, briefly share my thoughts and pause here and maybe perhaps open up the forum for the, further discussion. Over to you, Dr. Sundar.
Thank you very much, Sanjib. Wonderful exposition of the opportunities and challenges. We now will open for a Q&A. I see that we already have some questions in the Q&A box. But before I go into the Q&A, I have one question. Now the fintechs, they are attracting a lot of funding, and they are going specifically after targeted areas of the bank's business. Are banks able to attract the same kind of talent that fintechs are attracting in order to respond with in a matching way in terms of the technology? Are banks able to attract people to take on the challenge posed by fintechs?
Very pertinent question, actually. This is one discussion, not only from fintech related, but look at how the banks are evolving, in last decade or so, particularly in our part of the world. So if you go into the bank boardroom of many, some of the emerging economy or even developed economy, or if you talk to bankers from, many Southeast Asian country or even from India, that most of the time I felt, am I in the room with a regular banker, or these are new breed of banker who not only speak the language of dollar and cents, but also speak the language of bits and bytes. Banks are being mostly led by now the, people, technology jargons, the entire banking platforms. So first disruption started a couple of decades back with the CBS, when the CBS was introduced from the manual system. Actually, Nepal was fortunate enough to ride on the CBS platform early on, in the 80s actually, when most of the South Asian banks were still on a manual Bahi Khata type of ledger type of stuff. But having said that, but last decade of intervention and disruption meant, we are getting new breed of bankers who not only speak the language of dollar and cents, but also speak the language of bits and bytes. Now, coming back to your question on, will be bank able to retain and attract the talents like the fintech do? I mean, that's a kind of a question I always, try to also reflect upon, because the challenge here is, like the fintechs, the kind of the talent required in fintechs are not your typical banker. They are different breeds. So that is where, and you need a deep pocket to attract and retain them, because these talents, and you cannot fit them into your regular, like a banking structure or a hierarchy. That's I see, at least in my country, where this hierarchy is given from one grade to the another grade, and the positions are created based on the job description, and there's no room for people with a talent to come and have a lateral entry into your system. Right. So this is where I think this is where bank would lose out. As from my perspective, the bank should seriously reflect upon first acquiring the the skill and knowledge required to run the modern banking. They must be technology savvy as well. They must be able to speak the language of bits and bytes. Because the banking, if you look at any banking vertical now, whether it is retail bank or the business bank or the corporate bank, where it is the operations, the customer. So the back end of that is, everything is run by a system. Digitization has really penetrated into the most of the countries' banking. So when you're digitization is something that is internal automation, but even then, to understand that, you need to have a familiarity with the kind of the technology. Now, fintech is another altogether a different ball game altogether. You are exposing yourself to a lot of a different kind of innovation, and also different kind of risk. So this is where, and if you recall, in one of my slides a while back, I had talked about bank versus fintech and the collaboration. This is where the collaborative model has to come up. And this is where I think it is for the banks, because of their size, because of their influence, and because of their presence, it is for bank to actually come forward rather than fintech. Banks should come forward and start embracing fintech, and as much as they can, and profit from the either collaboration or cease to exist. When you are not more relevant, you can't be relevant, you can't speak the language. And look at the demographic shift. Look at the kind of my country, Nepal, is such a young country. I mean, 60% population are less than 40. And these are all smart, savvy, and they also speak the the new breed languages. So I think, and that's similar happening in the other part of the world as well. So from my perspective, to answer your question, I mean, banks should find a way. They should be able to afford that, and must come forward and collaborate.
Wonderful. So Dr. Fung, are you enabling the?
Yeah, so we would like to invite Golam Sarawak, our participant in PMBF Batch 7, to pose a question directly to Mr. Subba, please.
Thank you for the participation. My question is it prudent? Is it prudent act the government to allow testing in the
Golam, it's your voice is not very clear.
I can't hear him.
Golam, can we move to the next question, and then you arrange your speaker and come back?
Sure.
Okay. Rupak, would you like to go ahead?
Good afternoon, Sanjib sir. Thank you. Are you able to hear me?
Yes, I can hear you, Rupak.
Okay, good afternoon, Sanjib sir. Thank you so much for your wonderful insights about the payment industry. It's a both honor and privilege to have you today as a key speaker and learn from your diverse experience regarding disruption in payment industry. I have a question regarding the bank's strategy in this disruption. So what should be bank's strategy in disruption, either to cooperate or compete? most of the time, obvious answer we get is like we have to cooperate and we have to partner with banks so that both parties can benefit from this digital disruption. But won't partnering make banks dependent and hinder their ability to innovate in digitalization?
I mean, thank you, Rupak. Actually, another very good question. You know, I think the discussion here is, you know, for bank to cooperate or compete with fintech. I mean, whether that's a relevant discussion or not. But the biggest question for bank to answer is, do you want to stay relevant? You know, as a bank. You know, like the advancement in fintech means like, you know, I mean, the most of the retail payment, if you look at it, you know, and the payment landscape or the retail consumer kind of initiative, fintechs are like, you know, regionally and globally really taking up. So, you know, for bank, you know, should actually very serious retrospection and also reflect on, you know, how are these fintechs making me irrelevant, or do I still, how do I maintain my relevancy to do that? I mean, you know, like as I said, and in my discussion with Dr. Venkatesh, this is where the banks, you know, because of, you know, like their presence and size, you know, and before they are really weeded out, I think they should try to collaborate as much as they can, you know, like, and I think that's the way forward. You know, like in a lot of countries, the regulator has made, you know, further disruption. You know, like for example, in Nepal, it has not come up, but I think in India, like P2P lending, you know, peer-to-peer lending up to a certain amount has, you know, is allowed. So in many other countries, and, you know, like, and crowdsourcing, crowdfunding, you know, like all of this kind of a new technology-led source of collecting source of investment and the funding, will these, you know, make bank irrelevant? Only time will tell. But from my perspective, as more and more population catch up to the, you know, new technology and new age technology and the solutions, bank will have a very difficulty time trying to maintain and, you know, like clarify their position. So it's the right time. So, you know, like you should not ignore the wave of changes that's happening when it comes to the, you know, technology-led advancement. I think banks should get into the, actually right into the middle and, you know, try to control the driving seat if they can. If they cannot control the driving seat, then at least they should create a, you know, like a airplane mode where, you know, there's a pilot and co-pilot and try to run and have a safe landing together. I think that's my 2 cents to your question.
So Ghulam, are you ready?
Can you hear me?
Now we can hear you. A little bit louder, please.
Okay, there was some technical glitch. Sorry for that.
Yeah, so it is fine. Now we can hear you.
So my question is, do you think it will be a prudent act for any government to allow tech firms like Apple or Amazon to enter in the financial market without considering the systemic risks, as they are both in the they will be in the technology sector or also in the financial sector. So if they fail in technological sector or financial sector in both, then there will be hazard. So I want to know your opinion about that.
So Sanjib, the question is the risk posed by entry of big companies like Apple or Amazon, because they're both in technology and in the financial sector.
Right. I mean, no, I mean, that's from my perspective, you know, like, I mean, there's a way to stop it if you want to stop it. All right. I mean, you know, where, I mean, the laws like antitrust could come into place, or where, like, you know, people or the government or regulator may think that you are totally diverting from your main role. But again, you know, like the advancement in technology, particularly the scalable technology is something that really, you know, like how much you can have a control over it, you know, how much you could regulate it over the period of time. So the challenge here is, you know, like, I mean, and how the people in general would react and, embrace this kind of technology. When, let's say, Apple and Amazon becomes a way of life, what are you going to do with it? When if these are the solutions, it's a way of life. Just like when you wake up and you pick up your mobile phone, is getting a way of life. And then similarly, in Apple and Amazon becomes like your like an entire kind of a provider of your services and the product, and including the finance. So so that is where. So of course, like it does hurt the emerging and the small economy like mine, where I cannot protect my like own system and own players and own investor, and I have to succumb to these big giants. That would be very, very unfortunate, right? So I'm sure as we see some of the developed countries where there's a economies, the size of economy is bigger, and there's a room for most many other to enter and play. They might have their own strategy to tackle and address these issues. But for small economies like ours, we must be at least be protective, and that depends. Again, to answer your question, Ghulam, here I think the government would take their own stand and strategy based on their own unique situation. I think that's how would I reflect to your question.
Thank you. Before I give the floor to Mamoon, and my good friend Dr. Vijayawardene is here. Welcome, Dr. Vijayawardene.
Dr. Venkatesh, thank you very much, Mr. Sanjib Subba, for taking us through the latest developments in the payment system disruptions and the challenges faced by countries like ours in the South Asia region and also Southeast Asian region. I have a few points to make. One is that the competition between fintech, that is the financial institutions going for technology, and techfin, the technological institutions going for financial services, will ultimately result in an improvement in the services to the customers, because customers will get a better deal. But it will actually pose a new problem to banking regulators, because these techfin companies are not regulated by central banks or any other regulatory authority. And there is no guarantee that the payments would be assured and the security would be maintained. And if there is any kind of a disruption to payment system, there's no way for the banking sector regulators to bring it back to normalcy, unlike the commercial banks and other institutions which are regulated. So it has actually posed a very challenging job or challenging task for the banking sector regulators. Unfortunately, none of the countries in our region, including the Reserve Bank of India, has given thought to resolving how a payment disruption would really take place within the tech-fin sector rather than the fintech sector. The fintech sector is within the control of the central bank, but the tech-fin sector is outside, even outside the control of the government. So this is one of the challenges that we are facing today, even though the competition would result in an improvement in the welfare of the customers. The second one is that the introduction of this cryptocurrency by countries in the region like India, because India has now announced that it would introduce its own cryptocurrency in the name of, say, Lakshmi. And once it happens, probably the payment system that we are talking about with this fintech or techfin will become totally irrelevant, because the central banks will be in a better position to handle all the payments, even retail, wholesale, within the country and outside the country. All these payments can be handled by the central bank with its digital currency, and most of the central banks are moving towards that. So I think we'll have to look at these two challenges which are faced by us today. One is how to control these tech-fin companies. The second one is what to do to banks when central banks go into business, because central banks are better placed to run those businesses than any of these companies. So thank you very much.
No, thank you, sir. I think very good, like, the kind of the explanation that you did. And yeah, particularly when it comes from my perspective, if you look at the evolvement of fintech, and the regulatory regime, if you go back, the fintech started there, like, kind of a product and services first before they came into the radar, like the regulatory radar. So regulatory radar actually followed the development in the fintech. That's how we had seen evolving, and most similar with the crypto, right? So crypto was not kind of conceptualized or like, from the either from the state perspective or from the regulatory perspective. Like it's some private sector, techno savvy people, and because they wanted to find a solution, right? They wanted to come up with innovation and solution for, like, for general masses. So I think TechFin certainly as of now is not in the radar, but the more the penetration and influence as it is an evolving process from my perspective. Even the regulatory regime, as you would, if you look at into different economies and, like from developed economies to underdeveloped economies to emerging economies, the regulatory regime is also changing towards being more and more techno savvy, like the RegTech kind of the stuff, and, I think that's a demand and the need of the hour and the wave. Everybody's trying to catch on that wave. So the TechFin will certainly, depending on the kind of influence it will create and the kind of impacts or the threat, it could have, will certainly come under some kind of radar as going forward. But also to mention in this discussion, sir, we should not also forget the, like the AML CFT issues when we talk about the payment system. I think I missed that point when in my earlier discussion, we are not still immune from the, like the anti-money laundering and the terrorist financing, and this could be including the cryptocurrency, but as I said, we cannot stop and we should not stop the advancement in the technology in the perceived fear, right? And we have to come up with the solution, and that's where the disruption, that's where the intervention, and that is where all the, top talents, the think tanks of the country, from regulator to technocrats to, like the, the state agencies, to everybody comes together to address that issue. But thank you, sir. Very good thoughts.
Thank you very much, Sanjib. Can I now invite Mamun to address your question directly to Mr. Subba? Mamun, are you there?
Yes, sir. Thank you. Thank you for giving me the opportunity. I would like to ask a question regarding the regulatory sandbox procedures currently using in some countries like Bangladesh and India also. Do you think that the regulatory sandbox using in these countries to restrict the flourish of fintechs can pose a threat to the banking industry in the future? Because if they want to catch up with the rest of the world, then they may have to expedite it. The regulatory sandbox can be freed more in the coming future. So that can it create a problem in the future?
I'm not an expert into the regulatory sandbox. All right, but let me just share my thoughts in terms of, like what I know and from my experience. From the regulatory sandbox, why should it be a threat to bank? Because I think that creates, like some innovation and the creativity and comes, provides some solution in terms of, at least for the fintech developers, they can test and try their solutions and, come up and the regulatory and it works under some prescribed format, and there are rule books to follow, and then the, solutions. All right. Now, increasingly there's a discussion on the, the existence of bank versus fintech. Let's not forget that, I mean, it depends on how the regulators approach looking at the whole advancement in technology as a whole. All right. So because the point I'm trying to refer here is fintech is largely, of course it is into the payment landscape solution, but within the bank, there's a lot of other different activities. It's not only fintech, like payment related activities. So the more advancement in technology solution can only come up with some kind of, activities where you allow them to flourish, right? So from my perspective, to answer in a nutshell, I think the, regulatory sandbox is a kind of a unique way to create and allow the, the new advancement and technology to flourish that can support, that should be able to support the, advancement in the technology and provide a solution to the bigger, larger section of the audience. Will it have a threat to bank? As far as I mean, my, knowledge, limited knowledge I have not come across anywhere, that is seen as a major threat to bank. But as I said, bank also need to evolve, and they also need to make their case. They also continue to evolve and, be relevant to their customer base.
I think in this context, it may also be good to draw on Dr. Vijayavardhane's views. I remember he wrote an article about this, about he wrote an article about this in the Lanka Times. Dr. Vijayavardhane, what is the CBSL experience with the regulatory sandbox, and how has it served the industry?
Yes, in fact, what has happened was now about 2 years ago, the Central Bank of Sri Lanka introduced this sandbox regulatory system and invited banking firms to come up with proposals for the development of the financial sector technology in the banks. And they were promised that they would not be subjected to the crucial stringent regulatory measures, even if they make a mistake. In fact, about 10 banks have so far, I am told, come up with new proposals. And the project is going ahead very well. And recently, the Central Bank of Sri Lanka even introduced a new system of this QR recognition for payment system, payments via mobile phones. And I think if any central bank starts with the regulatory sandbox system, it would be the beginning of the development of financial sector technology in the banking sector. So it's something that we can recommend to all other countries as well, because because the banks are given an environment where they would not be subject to the stringent regulatory measures. Even if they make a mistake, they are pardoned. So it's just like if you allow our children to play and then, tolerate, even if they injure themselves, still they play and they learn it. So it's the same possibility. And Sri Lankan banks had very actively participated in the system, and now they are moving ahead with a number of new innovations being introduced to Sri Lanka's financial sector technological developments.
So now, Sanjib, you also mentioned that technology is expensive. So in this competing with technology scenario, including the new payment systems and so on, will the bigger banks with larger capital have an advantage over the smaller banks?
I mean, of course, when it comes to technology, you need to have the innovation in technology or R&D is a deep pocket, right? So the bigger banks, the resilient banks with a deep pocket, I think they are the, even like in what you would see from the pandemic, right? The banks' books are hit, right? So not only from the technology terms, but from the sustainability perspective, the bigger, the stronger, with the, like the high portion of the return earning. So if once you have a deep pocket, I think your ability to do things and try and the innovate would be like, but then you also need to have a, forward-looking perspective, as I said, disruptive leadership this is where. And also, asking a question to yourself, I'm a big bank, but in what sense? Now the question for the big banks, even like you look at their asset, the quality of assets, how would it reflect on your entire situation? So, but of course, yes, it does help when you have a deep pocket, your ability to invest goes up, your ability to take risk and create innovation, takes positively.
Wonderful. We have one of my MBA students, Dipesh. Would you like to go live and ask the question? Dipesh, are you there? Okay, now we have Pradeep. Pradeep Pathak, he has 3 questions there. Pradeep, we are going live with the video, audio. So please ask your question directly to Mr. Subba.
Hello, Sanjib sir. Good afternoon.
Good afternoon, Pradeep ji.
I'm very grateful that you gave this latest insight on the fintech in Southeast Asia and including Nepal. I just want to summarize my 3 questions in one is that does the bank now onward moving toward wholesale players only? How can we justify huge investment in US fintech as the market retail banking is now seemed open for all the section of economy and platforms, not only banks? How the huge investment can be justified from the part of the bank?
That's the question, right?
Yes, yes.
All right. So Pradeep ji, from my perspective, let's not what I feel is, like in a country, let's take an example of Nepal, right? As a a country which is a emerging economy, and we still have a sizable unbanked population. Not only unbanked, like the access to finance or access to capital, or like the entrepreneurship development, like the employment situation. Everywhere we have a greenfield opportunity. It means there's a lot of things can be done. I mean, it also could mean that not much has been done. All right. So yes. The development of fintech of Nepal is at a very, very nascent stage and very early stage. Lots of positive things happening. Of course, it will have an impact in the payment space of where the banks earlier were enjoying virtual kind of a monopoly that's being disrupted through some of these fintech players. But most of these fintech players are still piggy banking on the, riding on the banking platform. All right. For example, let's take the wallet services. So to load onto the wallet, you still have to go to your bank account and, take the money out from your bank account and load up to your wallet. All right. So, through the wallet, then you are doing a lot of different kind of payments. So from my perspective, what I see is that there's still an ample amount of opportunity for the bank because banks, the advent of the banking system, how it started centuries ago, were mainly to cater to the payment system, right? And it has made it smart. The entire evolution of the banking history, and if you go back to the why the bank came into the first place was to facilitate as a financial intermediary to facilitate the payment system between from the depositor to the borrower. But now the discussion is on the retail side and the consumer side, and the way the fintechs are more and more aggressively coming up, offering solutions, and the regulatory is also kind of and reflecting positively and allowing these innovations to take place. So bank would still find their in big ticket size. You rightly pointed out but I would still see in an emerging economy like Nepal. Bank would have its retail and consumer banking relevancy for at least if not more, but at least a decade or two. So I would see still, like we have to continue investing into the banking solutions and technology, because we have not yet, fully reached to the curve where we can say the curve is the kind of the limit. I don't think we have reached there. So there's opportunity, Pradeepji.
Sanjib, we are probably running out of time a little bit. One question from my side is like this. As a consumer, I have now seen that I don't pay anything for payment services. There was a time, not in the distant past, if I transfer from my bank account to your bank account, I would pay a fee, a transfer fee. All that is gone. That means, someone was making this money in the past, and that is not there anymore. I also used to pay using credit card for many things. There was a commission on the card which the merchant was paying, but now I'm not using the credit card in many transactions, so it's being done on the phone and so on. The prompt pay that you mentioned, it works in many places. So obviously, the revenue for many banks from this source has disappeared. And what I understand is that for people like Paytm, etc., the source of revenue is the float, the money that they are keeping with the system. So going forward, is this a sustainable way to support payments? I mean, you make huge investments, you don't charge for the service, and then you depend on the ancillaries, like the float or the advertising and so on to make money. Will this continue to work? What's your take on this?
No, very very pertinent question again. I've been following, similar discussion in the subcontinent. If you recall, RBI had recently asked in bank not to charge for the, digital payment and, so that waived the fees and charges. And similarly, our central bank has also mandated the banks not to charge for the inter ATM. When I use ATM card of one bank into the other ATM, there's a charge. So it's all free, right? And you also mentioned about the floating of the, float that you would earn. For example, the payment banks, like what in India they are doing, they have done the Paytm, similarly in like wallets, how they survive. The businesses, in terms of the investment in technology, there's a huge investment, and there must be to achieve that, there has to be economies of scale. All right, from my perspective first. So there should be enough critical size, and the economies of scale has to be created for them to, they survive, and different models. So that's a kind of, again, very intense discussion happening right now. And I think from the regulators' perspective, why they are restricting it is because, again, from the financial inclusions perspective, from the digital financial service and the equality and the, it should be available to everyone freely. And maybe for, it's also a message to the bank that, you should not, that's not your code, but it's a kind of the service that you should provide. Right. So why are you charging for, these services? So maybe that is the kind of the notion from the regulator's perspective. But I also share the similar sentiment where if the, solution provider are not able to make money, are not able to recoup their investment, why would anybody do innovation? Why would anybody come up with a solution, right? There has to be a business case. So the business case is, if not stand alone, there has to be collaboration, right? This again comes. So fintech and banks collaborating, and somebody has to be at the cost, the investment part. Otherwise, how are you going to support the innovation, and why would investor come, or the technology companies come up with a solution? Okay, so there has to be
an open question, you would say. So it's right. There is no solution there.
There's I do not see immediately, but I think this is a disruption. This is a regulatory disruption. That's what we have seen. So the disruption means then how would you come out clean under this disruption and still stay relevant? Still make your case. And still survive and be resilient, and you bounce back and start. So I think you are disrupted. So you have to think now under pressure.
How to make. I also have here with us Dr. Syed Mamoon, AIT alumnus and the Deputy CEO of CRISIL Bangladesh. Dr. Mamoon, you have a question for Subba?
Yeah, thank you. Thank you, sir, for giving me the opportunity. And this is, in fact, this is a very nice presentation and the timely, on timely issues. Here, just I have the particular questions about that. Like if you look at the speed of adoption of technology or fintech or techfin, particularly in the banking in industries who are adopting the fintech due to the current trend or necessity, the way it is adoption is going on, in the same way the regtech, means regulatory technology movement, is not going in the same fashion. As a result, like financial institutions or fintech or techfin are struggling to cope up with their business model. So particularly in the country like Bangladesh or the subcontinent in the South Asia, as we know, the changes of the government system or the regulatory system is a bit slower rather than private sector adoption speed. So how this challenge can be addressed or can be taken care by the financial institutions who are going to adopt the fintech?
I mean, I think your question is, like the speed of how it is happening in the private sector is the speed is more faster, but at the regulatory, at the aspect, the speed is rather slow. And your question is how to address this, right? But I think that is the case everywhere from my perspective, like the private sector and the, the tech companies or fintech, they can work in their flexibility. There's no bureaucratic barriers, and, they are more creative. Of course they are, because that's how, and they work under less restriction. Okay. And they can move faster. But if you look at the, most of the, and this is where the private sector always takes a lead and the public sector follows, and very rarely you would see the proactive approach of the public sector, even in developed economies, So I think that's a kind of the, but in where I see the meeting ground is where private sector like fintech or techfin has come up with a solution, and the regulator picks that up very quickly and supports it, and gives their blessing and come up with a policy regime, and because that's the role of the public sector, where you have to create an enabling environment, and you have to support the positive activities happening in that space, and create an environment and create a help them flourish through coming up with the policies and the rules and the acts and the regulation. I think that is the role of the public sector everywhere. So certainly there's a meeting point. But the government agencies or state agencies, to expect them to have a similar efficiencies in our part of the world is still, we have to be a bit, practical from my perspective.
Okay, thank you.
You had something to add on this?
Hello.
Yes, Pradeep Ladak. So, so as a quick summary, I think Sanjib, a wonderful exposition of the issues, and payments is one part of the technological disruption that is affecting banks, and it's very clear that the payments as a source of revenue is probably dissolving very fast for the banks. At the same time, huge amounts of investments are being made into this technology, and probably new revenue and business models are evolving, so much as in the same way we didn't know how Facebook was making money till it actually started making money, and then we began to realize what the game plan was. Probably in the fintech too, there is an underlying game plan. Now, collaboration is a good thing, as you said, and I think banks are reaching out to fintechs, and also, as you showed in the example of SCB, they are creating their own in-house super organizations in fintech. But the challenge remains, I think, as Dr. Bajwa pointed out in his last webinar, for the mid-size and the smaller banks. How are they going to respond? And will they have the necessary deep pockets to be able to make the investments? Or will they be big enough to attract collaboration with fintech? I remember that in one of the talks that a CEO from a bank gave here in AIT, he said that he tried to reach out to some of these big fintech companies for collaboration, but he got no reply at all. So I think the value proposition of the bank itself has got to be attractive to be able to attract partners from the fintech industry. All in all, I think this calls for a new breed of bankers, if you like, people who are not only savvy in the traditional areas of banking, but also understand technology, strategic partnerships, and creating values for both partners, that make the partnership worthwhile. So thank you again, Sanjib, for your wonderful contribution. I join all my students here in PMBF and in the MBA program and all attendees in giving you a big hand. Thank you again. Now I hand over the floor to Dr. Phuong, who will have a closing message for you. Thank you, Sanjib.
Thank you so much.
Sorry, Dr. Venkatesh, your student Dipesh Kudel, he's asking it. Can he ask?
Dipesh, are you back?
Yes, sir. I couldn't unmute myself.
Okay, so please go ahead, Dipesh. We called out your name and then we missed you. Please go ahead.
Thank you, sir. Good afternoon, Sanjib, sir.
Yeah, good afternoon.
Sir, you showed the data of how the transactions were made digitally during this time of COVID. So my question is, do you think this trend will continue even after the time of COVID, or people will just go to the bank and take out money from there after this time?
You're speaking my fear again, right? I hope, and I want to be optimistic here that the trend will continue. And, we have to incentivize, again, as I said, in Nepali context, I think we still have to create a lot of awareness and, sensitize the issue and actually capitalize on the emotion and the sentiments that general public has right now. Our bank has a very good solution for our day-to-day use. Most of the bank has a mobile, banking app, and that's also connected to some of the fintech. And this solution can take care of most of, my day-to-day need. But that also need to be takes to the next level. Those numbers that we have seen from the Nepali payment landscape is actually a very small portion of where we should be. But positively it's a very good start, very good news. And to allow it to move and flourish to the next level, I think we need a more collaborative approach here. One is to bring all the base level service provider and producer and the seller to the payment network. Maybe scalable model here, so something like QR enabled solution that goes to all the pop and mom store, all the street vendors where we buy our vegetables to milk and day-to-day daily transportation, fuel. And so all of this network has to be brought into the, the payment technology. So once that happens, and because when people find that only with once they go out from in the morning, only with a tap of mobile phone, they can do their, all their transaction to buy a, pack of milk, to buy a, a sag and the vegetable, to everything. But that enabling environment yet has not been created. So there's not much of a footprint where your QR or mobile device are accepted at the base level. So once that footprint is we have is completed or at least initiated through incentivizing the merchants, that's what we call them, the merchants. So and then people would be able to start using the services. But as of now, if you ask me again, yes, I want to remain optimistic that these numbers actually multiplies by 100 times by next year. That's the whole goal is. But to do that, we have to create still the infrastructure, and the base level infrastructure has to be created. I hope this answers your question.
Yes,
also,
sir. Thank you
one
very
last input. Dr. Srinivas Rao, our colleague here in AIT and an experienced banker, is here with us. Dr. Rao, your comment on the regulatory sandbox?
Yeah, what I was telling that RBI has introduced it quite some time back to enable the fintech companies and the banks to make experiments before they roll out for the customers. So this is going to increase the diversity in the products and it will help the fintech companies not to commit mistakes when they roll out, but to actually roll out only those which are found to be good and foolproof, both from the regulatory point of view as well as from the customer's point of view. So that is going to create a good ecosystem, and it is not going to create any threat to any of the financial entities, except that it is going to add to the competitiveness. In any way, as Dr. Sanjib was saying, every entity has to struggle to stay competitive. So it cannot go out of that. And same is the case as far as these remittances are concerned. Like when the remittances increase, we may not get the fee, we may waive it, but there will be a lot of incidental businesses which will be coming through that, like the cross-selling of the products and float funds, and many of those, maybe that some of them will be borrowing from the banks. So there will be a lot of huge expansion in terms of digital framework that is going to benefit the financial entities. So nothing to worry that if we waive off the fee in the near term, it may create some disruption. But in the medium to long term, the networking of the financial system will be such that it will benefit the whole lot of the ecosystem. That is what is my take on these aspects.
I think
thank you very much, Dr. Rao.
To add on to that, that's a very good one. Also, when you talked about remittances, it also reminded me in the payment landscape where we have a cross-border payments. We should not forget when we're discussing actually payment, there's a huge cross-border payment. If you look at it, like we're in Southeast Asia, there's a huge cross-border payment in South Asia as well. From Nepal to India, India to Nepal, Bangladesh to India, India to Bangladesh, there's a huge cross-border payment taking place. So this is where another opportunity into the payment stuff is, as we go forward, I don't know how the countries would react to these cryptocurrencies or digital currencies, or maybe there's a single currency visualization would come into the picture as well to make life easy for everyone when it comes to the cross-border. Nepali currency as of now is not convertible. I'm not sure about in rest of the South Asia. Indian currency is convertible, I think, but we are not. So in that sense, cross-border payment and the remittance also is part of the payment ecosystem, and should have a major disruption from my perspective.
Thank you again, Sanjib.
Thank you very much, sir. Thank you.
Thank you, Dr. Rao.
Thank you.
So now I hand over the floor to Dr. Phuong for the final comments and closing of the event.
Thank you very much, everyone, for joining us today. And there's a lot of questions from the participants. So coming up next, we have the next webinar, and the speaker will be the CEO of the People's Bank in Sri Lanka. This is one of the biggest banks in Sri Lanka, and the topic will be how does digital transformation work in the bank. So every CEO series talk, if you attend all of our series talk, you can see that it's all connected to each other. So this will coming up in the next 2 weeks time. So please follow us on our Facebook page, PMBF at AIT, and all of our webinar is live streaming on our Facebook page and our YouTube channel, Banking and Finance. So we're looking forward to welcome you again on our next webinar. Thank you, everyone, and have a good evening. So thank you, Mr. Sanjib.
All right. Thank you so much. Thank you all. Have a good day. Bye-bye.
Thank you. Bye.